Welcome back. The JSE has posted double-digit growth in its bottom line, with headline earnings per share jumping 12.2%. The largest stock exchange in Africa has cited diversified business segments and asset classes as one of the factors that benefited during the period. Group CEO Leila Fourie joins us now for a closer look at the numbers. Thank you so much for your time, Leila. Indeed, double-digit growth in many of your financial metrics, all the way down to the bottom line. What story can we derive from this performance? Is it all about diversification?
Zanati, we're very pleased with the strong performance that we were able to deliver against a very challenging macroeconomic backdrop. Our headline earnings per share were up by 12.2%. Our NPAT, or net profit after tax, was up by 11%, and that translated in a return on equity way above our cost of capital at 19.4%. Last year that was 17.8%. This is really as a result of high quality earnings. We delivered very resilient operating revenue, which was up by 6.9%, and that was despite our largest market, which is the equity trading market, which was down by 9.5%. And that was ahead of analyst expectations, which were expecting either negative or marginally positive operating revenue. The reason that our revenue was above expectations was that it was supported by diversification across the asset classes. So the equity downturn was counterbalanced by the bond, derivatives and commodities and forex markets, and then also by a number of other business units, such as our information services, which were up 20%, which were up 16%, our JSE investor services, which was up north of 20%. And these results were supported by very healthy cash generation, which was up by 13.6%. And this was all achieved off the back of the implementation of a strategy that we promised the market a couple of years ago, and we're now starting to see solid delivery. We're implementing through modernizing, partnering and delivering innovation much faster through our partnerships.
Yeah, and indeed, I hear the story of, increasing revenue in your non-trading activity. And of course, you mentioned the downward trend that we saw in the equity trading market. How concerning is this subdued trading activity and volume flow on the JSE, and how are you defending against it?
Zanati, trading flows are a function of cyclicality. They do tend to go up and down. And we are an event-driven market. We're a very strong market relative to other emerging markets of our size. We're the 20th largest in the world by market cap, but we're only between the 36th and 38th largest by GDP, depending on the exchange rate. And that's because we've got a number of large, very well-known and very stable and solid listed entities. And we've also got a very strong investor base in our pension fund and our asset managers. And so the South African market is strong and stable despite macroeconomic, global and local volatility and uncertainty that we're experiencing.
Leila, you mentioned in your results commentary that you delivered listing requirements enhancements, and I'm wondering if you've seen that filtering through to the pipeline of listings yet.
Zanati, we are pleased to see that there is an uptick in the number of potential listings. We have a number of listings that have been announced in the market. Those are around themes of unbundling, around themes of inward listings from perhaps the LSE or other international exchanges, and then of course a number of property REITs or property and infrastructure infrastructure REITs and also mines. So we've seen We Buy Cars are going to be listing on the 11th of April. Boxer is going to be unbundling from Pick n Pay. Rainbow Chicken have announced a listing imminently. And then we're very excited to see some of the resources companies like Marula Mining, Vanadium Resources, which will dual list, and then Aurus Resources, which is a dual listing from NASDAQ. So things are starting to look better. We're cautiously optimistic. Listings is very much a function of the certainty in both the global and the local macroeconomic environments.
Yeah. Leila, you've said that you continue to manage your cost base, and I do also note that your operating expenditure did increase there, and I'm wondering if there are any significant headwinds that you are zoning in on in terms of your cost base at this point.
We certainly are managing our cost base in a very disciplined way. Some of those costs were related to things like unabsorbed VAT and base effect issues. And we are looking at managing our controllables, and we're looking forward to structurally focusing on specific areas where we can control and reduce our costs.
Yeah. And of course, diversification remains one of your pillars for growth. And I'm wondering how much more room do you have in diversifying your revenue streams?
We are going to continue to grow that. Of course, the core of our business remains critical, and we will continue to invest in our trading markets. However, we continue to invest in the organic growth of our information services business, and we have launched a number of new products in partnership with internationals. We will be launching a white label analytics tool to other global exchanges in partnership with an international environment. We've also launched a cloud service for our members to build a local environment. And then excitingly, we have announced that we are going to be in a collaboration with Amazon Web Services, and we will be innovating and re-platforming and modernizing one of our very large back office systems. That initiative is designed not only to modernize the system and to make us more agile, but also to reduce costs for the brokers. And so we really are taking seriously the focus on innovation of technology and driving real shareholder and stakeholder value through improving our technology and our infrastructure stack.
All right. Well, thank you so much for your time, just giving us more insight on those numbers that came out of the JSE earlier on, and of course the pillars for growth going forward. That was JSE CEO Leila Fourie.